for joining me today. Originally, I was thinking about presenting about the ECB trials, but since we are on the exploration stage, I think we are allowed to have a bit of a look ahead and leave the heavy lifting, the technical details to our friends from KPMG who are running a workshop about ECB trials. So personally, the ECB trials have kept me very busy the last months, and not least because of the very strict timeline the ECB has set for everyone. If you're lucky, or if you haven't yet been in contact about the ECB trials, I salute you, but I won't let you get away with it. So I give you the ECB trials in a nutshell. So the Euro system is exploring new technologies for wholesale central bank money settlement, and participants are either market TLT operators or eligible market platforms. So for example, having target T2 access. The ECB set out and identified 4 principal options during the trials, they are exploring the first 2. So on the one hand, we have our market DRT where the assets lie and mature. And on the other hand, we have our existing target 2 system for the settlement, wholesale settlement. Why not combine both? And this is the approach that has been followed by the Bundesbank and the Banca d'Italia and the trigger solution in the TIPS-Ashling gateway. Essentially, I introduced some processes and mechanisms that will ensure that the settlement on the payment leg comes always with the settlement on the market DLT. And thereby, I guarantee the atomicity of the DBP, the delivery versus payment process. In the trials, they're focusing heavily on the DBP process. And the trials are running from May to November. I forgot to say that. The second one is the interoperability solution by the Banque de France. So this is going the next step. Instead of having our existing system, we actually bring tokenized central bank money to a blockchain, a DLT network. And because it's a separate, segregated DLT, the Eurosystem DLT, I still need some mechanisms and processes to ensure, again, the atomicity of the DBP, meaning that my transfer of tokenized money always corresponds with a settlement on the market DLT. Now, the third and fourth option, they're quite different. So here for the first time, our market DLT and the payment DLT will be the same. So instead of having 2 DLTs where I always have to live with some processes, mechanisms, protocols, and ensure my atomicity, I can now combine it all in one transaction. So I bring the transactions for my settlement of the payment and for my security into the same block, and I can be sure that either both happen or none of them happen. Now, settlement is easy. It's essentially a right in the application. If I want you to think now about what becomes possible if my money is tokenized and lives on a DLT. And essentially on a programmable infrastructure that I can arbitrarily interact with. But before this, I like to go one small step back, about 500 years. So we start with, before we had banks and intermediaries, it was quite easy and straightforward. I hand over a coin of some precious metal, and in exchange, I will get some product or some services that I pay for. Now, this works really nicely if both things are in the same room. So if I have an apple and I have a coin, I can exchange it, and I can ensure that I get what I pay for. It becomes more complicated if there is some geographical distance between it, or if I have long lags between delivery and settlement. So this is where trusted intermediaries came in, our nowadays banks, who said, well, let's put it into a book on a ledger, who is holding what, who is owning what. And instead of having to bring the chest of coins, I can just update the ledger. And the intermediaries will guarantee that the ledgers are always correct. So they oversee those entries. Now, when I was coming to Frankfurt, I was thinking I should bring some coins, but actually I don't have one with me because we can guess that digitalization happened. So nowadays, we can very easily transfer money, but the underlying process is still the same. It's updating ledgers that reflect what is owned by whom. So the next step then, I think, is going to be some, is will be tokenization. So this way, intermediaries interact in a new way on a shared infrastructure. So I will have my assets and my electronic currency on the same infrastructure. And this will make completely new things possible that are economically unviable today. Because I give an example in a minute, the underlying process doesn't allow it. So to give you a simple example, let's consider a simple money transfer. So we have Alice who wants to send a payment to Bob, and she will have to go through a lot of loops you can see here. So she starts by sending the payment request to a bank. There's some account adjustments. The payment order goes to a settlement institution. Settlement institution has to give the advice of credit to the bank B, which just happens to be the bank of Bob. Now, if everything goes very smoothly, we are looking at what 9 steps are involved here for simple money transfer. If something fails, I have to reconcile, some more messages are exchanged, and all the time, Alice has no view on what is actually happening. If she wants to have a notification that the money has arrived, actually there's a second process, and that is added on top. So it's very complicated, even though we don't even look at cross-border payments, or if you think about the DVPs I mentioned earlier, where I have to settle 2 legs, that makes things even more complicated. So what do we have? Essentially, we have 2 very successful ledger systems, which represents 2 sides of a coin, essentially. On the left side, we have banks operating ledgers on segregated classical systems to record digital money, and regulations, processes ensure that transfers happen. And transfers always happen at par value, and I can get money from any bank to any other bank. However, my infrastructure is locked into a classical systems. As we've just seen, there are a lot of intermediate process steps needed because these infrastructures don't really speak with each other that easily. Also, it means that these infrastructure put some limitations on what is actually possible. If the infrastructure and the interfaces between these infrastructures don't allow it, I cannot make this possible in my process. On the other side, I have a programmable shared infrastructure that allows me in principle to do anything that is possible. I can, sorry. That's the wrong button, where do I have to go?
Something missing?
Yeah, I can't go backwards. There we go. No. So we have a DRT where my my network and can ensure atomicity, as I mentioned before, and I have a lot of flexibility in what I want to get running there. So essentially, anything I can put into code is possible. I can have logical statements. I can have if this then that processes. So essentially, anything you can think of should be possible. However, one critical element is missing, and it's an acceptable payment option. So if we bring tokenized money to a shared programmable infrastructure, then this will create an ecosystem with very, very few limitations. But I can even start enriching this ecosystem with outside data, make it more interesting, and make it even possible to have even more use cases. So if you think about what I mean here is the processes that are possible nowadays, like the financial instruments, they always reflect the possibilities of my system. And there's no really good reason why I want to have a payment calendar. I could also just say, well, I need the money because certain events have happened that trigger the payments automatically and not restricted to payments every 30 days. And they can change, they can start, they can stop. Anything should be possible. So how do we get there? What would it look like? In the upper half, you can see the programmable platform. And in this example here, we have private money participants by banks who provide the payment leg, and I can have assets of any kind on my blockchain. And the important thing is that we share the same platform here. So we have execution environment with smart contracts where I can interact with both assets of both worlds. And there's one thing missing, and that would be the central bank digital currency. So I can have in place, let's say, some deposit contracts and some APIs, bridges that allow me to bring central bank money from the reserves to the private money partition. Now, this would allow me to have atomicity and settlement finality between private money and non-money asset partitions. However, if I want to consider any process that involves CBDC settlement, I would require the CBDC partition, and this can either be the central bank issuing money directly on the blockchain, or it can have some back and forth process to connect to the existing reserves. I just want to give you some food for thoughts of what might be possible, some ideas, and this is really just like a few examples. So let's start with the supply chain. Imagine you're running a company and you sell your products, and it's quite an expensive machine. So if you probably need to buy some intermediate goods from let's say Asia. And this product is this intermediate good is being shipped to you. And because you will need to start the production of your machine early on, you need money, you need funding, so you can get a loan from a bank. Typically, you would probably put the goods as a collateral with your bank to get a reasonable interest rate. So the blockchain here would help, or its shared infrastructure can help by preventing fraudulent behavior, ensuring that any collateral is only being placed as a credit, or any good is only being collateralized once. Exactly. I can also enrich it with outside data. So let's say the shipment is on the way, and the risk is the closer I am to the harbor, the lower the risk of any accidents is. So this could be reflected in, let's say, additional payments from by the bank, or in lower interest rates, for example. And this can all be automated. Another one would be the real estate token. So we would have anybody who I'm actually looking into buying a house at the moment. So I'm learning about all the things you have to do here with notaries involved, and the banks want to give you a loan, and the loan needs to be secured with the estate or a house that is not yours yet. So there is a lot of manual process steps involved with notaries, with banks, with documentation, all this. And it could be much simplified, more simple, if we have an asset being tokenized on the platform, and then I can ensure that if I swap it, the atomicity is guaranteed. I could also look into fractionalizing these assets. So if you think of a big building, you need investors who can provide the liquidity to actually buy this building, which makes it a very illiquid market. But if I start bringing in a fractionalized, or if I cut my tokens into small pieces, more investors might be interested. They are able to invest in this property, and I can have, I will also make sure that by this also the market will become more liquid because I have more potential buyers. And because I'm running low on time, I only want to talk about the interbank payments, which brings me to the next slide. So interbank payments, especially when it's crossing borders, becomes very complicated because of, let's say, different time zones, different regulations, and all the kind of forth. And also these rules I could bring into shared programmable infrastructure that allows me then to easily transfer money between currency restrictions. And even the process we were looking at in the beginning, where Alice was sending money to Bob, could be much simpler because the checks that Bank A and Bank B have been doing, we've done at the same time on the same platform. And once the checks are done, I can, both banks know about the outcome of the checks, and the transfer can happen much faster in a much shorter process. Coming to the beyond, the Bank of International Settlement just 2 weeks ago announced a new project where they actually want to look into want to look into the integration of commercial bank deposits and wholesale CBDC, and this is brought in a public-private programmable financial platform. So here, really, CBDC and private financial institutes will share the same infrastructure, and this will make the cross-currency settlement much easier, potentially. And involved are the Euro system, with the Banque de France, and 6 other central banks, and some private financial firms. So if you think about the picture I showed you in the beginning, I think we can now all agree that a better representation actually would be a circle. So we started off dematerializing our assets, and digitalization brought us very far, but we still had to use the same processes were introduced to the dematerialization. And now, if I bring in tokenization, I actually achieve what was lost on the way. So all my assets will share the same room, so to say, and I can easily swap them in a atomic fashion to and this way allow many more difficult, easier, but I have many more use cases that can become either very simple because it's a simple process and isn't burdened with additional process steps, or I can introduce like outside data and make a custom-made payment instructions as well. And this, I think I'm done.